Folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is at current 6:03 in the a.m. Eastern Standard Time. Let's get to it. Today is Jobs Friday, so we will talk a bit about what we can expect in terms of market reaction. But before we begin, I would ask, please, if you're watching this on YouTube, like, subscribe, leave a comment. If you're watching this on the website, enter your email address. You'll get that annoying pop-up if you attempt to leave the website. Tomorrow is Best Stock Charts, and that is where we review the stocks that we're looking at for the coming week, and that goes out free to non-members. Then on Sunday, I will send out the week-ahead commentary to members where we lay out our strategy for the coming week in terms of our positions, watch stocks, how the markets have traded, what the economic data is, and how we will react to future economic data. So a lot going on, and if you're not currently a member, and if you don't have time to do all this analysis, sign up for the 14-day free trial offer. Give us a shot. Click that link above if you're watching this on YouTube, and you'll be taken over to the website if you're watching this on YouTube. All right, so let's get to it. Yesterday morning, the futures were down sharply. And I mentioned that if we got a bullish reversal day, which we did on the NASDAQ and on the S&P 500, that would be a buy signal. It doesn't mean that you go jumping in with both feet, but net, a very, very bullish day yesterday. Now, today being Jobs Friday, what can we expect if we get a miss on the headline number? Probably not much. And why is that? It's because if we get a miss on the headline number, all it means is that the Federal Reserve is going to need to rethink its decision to raise rates, and the stock market really doesn't want higher rates, right? They want low rates. What happens if we beat expectations? It's an affirmation that the economy is still growing. If we beat by too much, that may be a problem actually for the markets because the anticipation of more aggressive rate hikes could be at hand, and they do not want ever-increasing interest rates. Gradual rate hikes, the market has been able to absorb. If we get a number that meets expectations, well then, yesterday's reversal bar is probably a sign of a market that is recovering and will probably move higher. So let's get to it. We'll start off with the NASDAQ. Here we were yesterday morning, and I talked about this recovery here of this lower band of support. We were in a trading range, a downtrend channel. We have now retested that lower band of support and broken out. So the path of least resistance for the NASDAQ remains to the upside. And we have a lot of good stocks out there, and I'll go over them in a moment. The S&P 500, a very strong day yesterday. We held support. Remember, I was talking about this head and shoulders setup. Here was the neckline. We were leaning into that neckline, but we reversed. A very bullish day. Now, what we need to see is a breakout above this line in purple. If we get that, it's off to the races. And in all probability, we will break out to new all-time highs. Because remember, the monthly chart, I believe I went over this with members on Market Wrap a couple of nights ago. Members, it's still posted on the website. I mentioned that the monthly chart was very bullish. We closed very close to the highs of the month for the month of July, and volume year over year, July 2017 versus July 18, we saw an increase in summer volume. That's good stuff. So there's no reason to believe that the market's going to necessarily sell off here when you have good price and good volume action. So the S&P looking strong. I would not be an aggressive buyer until we broke out above this upper band of resistance here. Now, taking a look at the U.S. dollar, we spoke about strength yesterday morning. We saw strength all day long yesterday, and overnight, a very strong session. We actually pulled off the highs of the session. We are holding support, and it does appear as though we will consolidate and proceed higher. Now, if we break down below this lower band of support, well, then that's a breakout point failure, and we could have a strong retracement to the downside. And what would we want to look at as a trade only, not as an investment, a trade only? We'd want to take a look at gold, the miners, Here is gold. We spoke about gold yesterday morning and the miners. Gold did, in fact, weaken up yesterday. It weakened up overnight. As for NUGT, it saw the teens yesterday. For the first time in a couple of years, NUGT hit the teens, but it did not close there. It snapped back and closed back above $20 per share, just slightly, though. So we're still seeing some weakness here in the mining sector, strength in the dollar. So therefore, we're just going to watch. Members, we'll talk about an ideal entry price for NUGT. I'm going to segue into a morning update for members immediately following swing trading today. So members, stick around, please. Okay, so let's talk a bit about the 10-year Treasury note. And we are seeing a rise in the note. We are seeing a bit of weakness on yield. And it's rather surprising, right? We just had a 4.1% GDP read. Why aren't yields ripping higher? They're at a resistance level on a weekly chart. Why aren't they ripping higher? Why don't we have a 3 handle on yield, at least on the 10-year? So that's one of those things that make you go home, right? If all is so well, why aren't yields ripping higher? So that's a market tell. Now, you had durable goods orders, which were lowered yesterday in terms of expectations. You had factory orders, the lowest since February. So I did mention yesterday that the U.S. economy, or at least the currency I believe I was referring to, the U.S. dollar was the least ugly of the bunch. The U.S. economy also the least ugly of the bunch being the Europeans, the Japanese. But we have our problems too, right? That 4.1 GDP read was a lot to do with the pulling forward of the purchase of goods in advance of tariffs being applied to those goods. So it's kind of a one-off quarter where we'll probably see an overly weak GDP next quarter because it's going to be very difficult to repeat Q2, which is historically the strongest quarter of the year. So if you're wondering why I keep watching gold, why I keep watching the types of positions that do well in an economy that is beginning to weaken, that's why. We understand that there are problems in the economy. They have yet to really surface, but at some point in time, with an economy that has been in expansion mode for, 10 years, they're going to bubble to the surface. But with a mid-year election season in front of us, I doubt it's going to surface prior to the elections. Let's get to some of the stocks that we're watching for today. Okay, the first chart up, TCP Pipeline Partners. We sold TCP Pipeline Partners on this explosion higher here. We bought it back here when nobody else wanted it. It was an extreme oversold trade. We are looking for a continuation pullback here on TCP, and then we're going to look to buy it back. I mentioned when we exited the trade that I wanted to buy it back as an investment because it pays a big fat dividend. This is a MLP, Master Limited Partnership, folks. So if you try to buy this in your retirement accounts, you may not be able to. So we are back down, looking at a 20 handle on TCP. Let's go to a daily chart. That was a weekly chart. And if you're wondering why we exited, it was because we had hit a resistance level, and it was the wise thing to do. Remember, this is a stock that had been simply decimated, and you had buyers above looking to get made whole as they bought here, thinking that they were getting a deal. So they attempted to catch a falling knife. They got cut really, really bad. That's why we waited for RSI to put in a higher low, Stokes to begin to diverge higher, and we formed a W formation. And then we broke out, we moved higher, formed a right side of a base, and enjoyed the rally higher. So we're looking for a continuation pullback here. Yesterday's price action was poor. We attempted a rally. We were rejected at the 30 level. We have a rising 20-period moving average. That may act as support. So members, we'll talk more about TCP Pipeline in a moment. Okay, Netflix. Netflix was hammered on an earnings report. We've had 3 sequential back-to-back up days. How is volume? Volume has dropped off dramatically. We need to see a breakout here above this upper band of resistance, and we may buy the shares and watch for a rally up to the 380 level or the 50-period moving average, which is now beginning to flatten out and hook down. I do not like the Stokes. I'm looking for a double bottom setup here. We have a double bottom setup on Ultimate Oscillator, but that's not a reason to buy. Google. A bullish reversal bar yesterday. Volume was a bit weak. How are our Stokes? Stokes are losing momentum. So Google remains a watch. I don't know whether or not I'm ready to buy it here just yet. Obviously, the path of least resistance remains higher. But I think the safe play here is to wait for a breakout above this upper band of resistance or a pullback to the support level with a stop just below. So again, just like with Netflix, we're seeing some good daily price action, but we're not out of the woods yet here. So these three stocks, TCP, which is not a stock, it's a master limited partnership, Netflix, and Google, these are all stocks that are consolidating. Now, stocks that appear ready or close to being ready to buy are Best Buy. Look at this consolidation here on a weekly basis. Really pretty. And when you go to a daily chart, a beautiful reversal day yesterday. Very close to a breakout. Nice cup, handle formation. RSI rising. Stokes are a bit weak. But this is a really nice consolidation here. We've been consolidating how long? Since February. We're very close to a breakout on Best Buy. DPST, weekly chart. Now, I spoke about DPST yesterday, and I gave you my reasons as to why I like the regional banks. All the banks did well yesterday, including the money center banks. But as I mentioned earlier, yields are a bit wobbly, right? And the banks do better in a rising interest rate environment. So I like DPST. It did well yesterday. Let's go to a daily chart. It broke out on Wednesday, Thursday, a continuation breakout. So we're very close to a buy signal here on DPST. Volume rose yesterday to about average. No breakout yet on RSI, but we're close. Steve Madden, I spoke about this one yesterday. We were looking for a breakout. We got the breakout. So this is one we may be putting on as early as today. Union Pacific. Folks, the transports looked outstanding yesterday. And Union Pacific flashed a bullish engulfing of the prior day's move and a bullish key reversal as well. This is a buy signal, especially if we rally up and through 151.50. So we like UNP. Shopify has been completely pummeled of late. But yesterday we flashed a bullish reversal bar. This is probably a drop on earnings. I haven't done my analysis of the rationale as to why Shopify took a hit. But if their fundamentals continue, as I've seen them in the past, look pretty darn good, the shares of Shopify may in fact be a bargain right now. So this is one I'm going to do a little bit more analysis on. I like the technicals. And you may be saying, Bob, we put in a lower low. Yeah, but yesterday, let's update this. We recaptured support. So Shopify is on our watch list. And that is it for swing trading today, folks. We're going to segue now into a brief morning update with members. If you're not currently a member, we'd love to have you. Sign up for the 14-day free trial offer. If you're not ready yet, that's cool. Just hit the subscribe button. If you're watching us on YouTube, enter your email address. We'll send you out best stock charts tomorrow. That is absolutely free. Have a profitable trading day. And members, let's begin a brief morning update with the U.S. dollar. Now, the dollar